Bitcoin has increasingly been recognized as a potential financial powerhouse, with many investors seeing it as a long-term growth vehicle. Unlike traditional markets like the S&P 500, which offers an average return of around 12% annually, Bitcoin's volatility and exponential growth suggest that it could deliver significantly higher returns over time. There is growing optimism that Bitcoin could offer annual returns of 20% or even more, given its historical performance and increasing adoption. This notion has led to the development of various predictive models that attempt to chart its future trajectory. One such model is the Bitcoin 24 model, a 21-year framework designed to forecast Bitcoin's performance based on past data, market trends, and projected growth rates. The base case of this model predicts a 29% annual return, which, if realized, would push Bitcoin to an astounding price of $13 million in 21 years. These predictions underscore the widespread belief among experts and investors that Bitcoin has the potential to dramatically reshape the financial landscape, outpacing traditional investment vehicles such as stocks and bonds. Bitcoin's performance since 2020 has been nothing short of remarkable, particularly when compared to other prominent assets. For instance, MicroStrategy, a company that has heavily invested in Bitcoin, has seen a return of 964% since it adopted a Bitcoin-centric strategy in August 2020. This incredible growth is even higher than Nvidia's impressive 934% return during the same period, and it significantly surpasses many tech giants like Microsoft, Tesla, and Google, which have each experienced returns of about 100%. Bitcoin's own growth has reached 387%, far outpacing traditional market benchmarks like the S&P 500, which has only grown by 66% during the same time frame. The contrast between Bitcoin and other investment vehicles is particularly stark when looking at commodities like gold and silver. While gold, a traditional store of value, has seen a modest increase of 25%, and silver has risen by only 3%, bonds have actually experienced a decline of 16%. These figures highlight Bitcoin's dominance and its status as a superior asset, outperforming even the top performers in the S&P 500 and solidifying its place as a viable and highly lucrative alternative to more traditional investments. As Bitcoin continues to outperform other financial assets, investors are increasingly looking for ways to maximize their returns by capitalizing on its potential. One approach that has gained popularity is leveraging debt to invest in Bitcoin. In this strategy, investors take advantage of historically low interest rates by borrowing money at rates between 3% and 5% and using those funds to purchase Bitcoin. The rationale behind this approach is simple. With Bitcoin historically returning between 40% and 50% annually, the return on investment significantly outweighs the cost of borrowing. This makes borrowing to invest in Bitcoin a low-risk, high-reward proposition, provided the long-term trends continue as predicted. However, not all leverage strategies are created equal. The speaker advises against more speculative tactics, such as trading Bitcoin with high levels of leverage on cryptocurrency exchanges. For instance, using 20 times leverage on platforms like Binance or trading on high-risk exchanges like FTX can lead to significant losses due to Bitcoin's volatility. Instead, the focus should be on long-term, stable investments that minimize risk while maximizing returns. For example, taking out a 30-year mortgage at a 3% interest rate to invest in Bitcoin could be a prudent strategy, as long as investors are prepared to hold through market fluctuations and focus on the asset's long-term growth potential. The current state of Bitcoin's market offers both opportunities and challenges for investors. In recent months, Bitcoin has shown resilience, recovering from local lows and moving toward higher price levels, signaling a bullish trend. For instance, after hitting a low of $52,546 on September 6th, Bitcoin reversed course, leading analysts to believe that this could mark the beginning of a new upward trajectory. One key indicator is Bitcoin's ability to break past the $65,000 resistance level, which many analysts see as a crucial turning point. If Bitcoin can close above this level, it would signal a strong bullish shift and potentially pave the way for new all-time highs. Technical analysis from various crypto experts also supports this outlook. Independent Bitcoin analyst Gel highlighted Bitcoin's recent high of $66,670 set on September 13th, which surpassed the previous September high of $59,800. This pattern of higher highs and higher lows suggests a strengthening market structure, which could lead to further gains. Additionally, the sentiment surrounding Bitcoin is increasingly positive, with growing interest from institutional investors and increasing adoption across various sectors. Other analysts, such as Trader, believe that once Bitcoin breaches the $65,000 mark, it could ignite a new wave of bullish activity, propelling the price even higher. These optimistic predictions are further reinforced by data from platforms like CoinGlass, which show a buildup of buy orders around critical price levels, signaling strong demand and support for Bitcoin's upward movement. One of the most significant factors influencing Bitcoin's price in the near future is the US Federal Reserve's monetary policy, particularly its decision regarding interest rates. The Federal Reserve is expected to announce its first interest rate cut since March 2020 at the upcoming Federal Open Market Committee (FOMC) meeting. While the specifics of the rate cut, whether it will be 0.25% or 0.5%, remain uncertain, the decision will have a profound impact on financial markets, including Bitcoin. Historically, interest rate cuts have had mixed effects on risk assets like Bitcoin. On the one hand, lower interest rates typically increase liquidity in the markets, which could drive up demand for Bitcoin and other risk assets. However, the broader economic context cannot be ignored. Some analysts warn that rate cuts often precede economic downturns, as they signal underlying weaknesses in the economy. For example, the 2008 global financial crisis was preceded by similar interest rate cuts, as central banks scrambled to prevent a total collapse of the financial system. Financial analyst Jacob King, CEO of Whalewire, pointed out that current economic indicators, such as rising unemployment, declining home sales, and plummeting housing starts, mirror the warning signs seen in 2007, just before the financial crash. These concerns suggest that while Bitcoin may initially benefit from the increased liquidity brought on by rate cuts, a broader economic downturn could limit its upside potential. Nevertheless, some traders remain optimistic, believing that the first round of rate cuts could be bullish for Bitcoin, especially if the stock market remains stable and avoids panic selling. Bitcoin is increasingly being viewed as a global store of value and a critical asset in the broader financial landscape. Unlike traditional assets like gold, real estate, or stocks, Bitcoin offers a unique combination of scarcity, liquidity, and decentralization that makes it highly appealing to both institutional and individual investors. As more people begin to recognize these qualities, Bitcoin is expected to play an even larger role in global financial markets. Over time, assets that have historically been seen as safe havens, such as gold, are losing their luster as Bitcoin's superior growth potential becomes more evident. Furthermore, there is an ongoing trend of demonetizing bonds and fiat currencies, driven by inflationary pressures and declining trust in centralized financial institutions. In this context, Bitcoin's decentralized nature makes it an attractive alternative, as it is not subject to the same risks of inflation or government intervention. The speaker also points out that equities in certain sectors, particularly those that benefit from technological advancements like AI and robotics, may continue to grow, but Bitcoin remains the top choice for long-term capital appreciation. Investors are encouraged to explore different financial models and assumptions to determine how Bitcoin compares to other asset classes in terms of long-term value. By doing so, they can develop their own macroeconomic views and make informed decisions about how best to allocate their capital in an increasingly uncertain global economy. So, if you're ready to take control of your financial future, now is the time to act. Dive into the world of Bitcoin and cryptocurrency and start making informed decisions today. In today's fast-paced world, staying informed and up-to-date on the latest developments in the cryptocurrency space is crucial. The financial landscape is constantly evolving, and those who stay ahead of market trends are more likely to succeed in their investments. This is where platforms like Bitcoin Zeller come into play. By subscribing to Bitcoin Zeller, you can receive daily updates on Bitcoin and other cryptocurrencies. The platform is designed to provide clear, actionable insights for both seasoned crypto enthusiasts and newcomers to the space, helping users make informed decisions based on the latest market data. Knowledge is power, especially in the world of investing. Staying informed and proactive is essential. By subscribing to Bitcoin Zeller, users can receive valuable information at no cost, positioning themselves to capitalize on future market trends and navigate the complexities of the crypto world with confidence. In conclusion, Bitcoin is not just a passing trend, it is a transformative asset poised to reshape the global financial system. Staying ahead of the curve through informed investing is essential for anyone looking to maximize their financial potential in the coming years. Stay informed, stay proactive, and embrace the future of finance with confidence.